Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right. No extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Sean Tepper. Sean is the founder and CEO of a company called Tykr, which is a platform that helps people buy and sell stocks with confidence. Today, Tykr has over 12,000 customers in over 50 countries. Sean, I'm looking forward to our conversation today.
Keith, appreciate the invite. Good to be here.
Yeah, absolutely. I always love to start, though, with each guest, kind of with their background, where you grew up and what eventually led you to investing and then deciding that, hey, I'm going to start a platform. Just love to hear the backstory.
Sure. How much time you got?
Yeah, well, about 45 minutes.
I'll keep it somewhat succinct to give you plenty of time to ask questions. But yeah, my background, I grew up north of Milwaukee, small town called West Bend. And I was always a pretty focused kid. I was an athlete growing up. I gravitated towards swimming. Team sports, I wasn't as good at. Baseball, okay, but swimming, I kind of doubled down. I'm like, okay, so individual sports, time-based, efficiency-focused, let's do that. And I was focused on getting a college scholarship. Did achieve that, but I was so burnt out by the time I went to school. I only made it 1 year in the sports. But then I stayed in school, transitioned my energy, though, to business. And I got into the hotel industry and kind of bounced around in different departments. But it was a really cool experience. I worked at a hotel called the Pfister Hotel in Milwaukee. If nobody's ever heard of it, that's the hotel in the city where a lot of athletes, celebrities, executives for large corporations, when they fly into town, that's where they stay there. So I ended up meeting, get this, Meg Ryan, Snoop Dogg, Bon Jovi,
Very nice.
Jerry Seinfeld. I mean, there's a long list. I was working in hotel security, so that's why I was in touch with those people. But it was a really good experience to learn how a business like that operates and how many different revenue streams I have. At the end of the day, I'm like, I'm not going to work to the hotel industry because you have to work weekends. And I'm like, no, I'm not going to work weekends. I've got a ton of hobbies and I want my weekends off. So I started a business after graduating school. I actually worked for an agency and then I started my own agency. Pretty easy business to start. It was just like building software, websites, doing video for small and mid-sized businesses. Did that 4 years through the recession. That was terribly difficult because nobody wanted to spend any money. It's like, how do you sell something that's not really, I mean, you need it, but you don't really need it, like marketing, right? What's the first thing to get cut? But did grow a bit in the fourth year, and a larger agency approached us and was like, hey, would you like to be acquired? We want to absorb your company into ours. And I was like, oh, thank God. Like, I'm looking for a change and I'm going to get out of this situation. So yeah, sold the business. It wasn't like a check was written like, hey, here's $1 million. That was the lesson learned on most service businesses are not that scalable. So their exit multiple really isn't there. I mean, sometimes you can sell a service business for maybe 1x, 2x EBITDA or profits essentially. And that's, again, very hard to do. So we wiped our debts out and our liabilities out. And I was like, all right, fresh start, but no big payday. So I'm like, how do I start making up for lost time here and get money working for me as opposed to working for money? And that's when the stock market came around. So in 2000, this was around 2010 or 11, I got into the stock market. I started picking stocks based on like recommendations I see on social media or sites or just different platforms. And there's always conflicts. And I did that for about 5 years, maybe kept up with the S&P 500. I lost some money, made some money, but I'm like, this is not sustainable. If I keep going at this, I could end up losing a lot of money in the market. Yet at the same time, and you and your audience will probably agree with this, is I was looking at Warren Buffett and the late Charlie Munger and realized that these guys are consistently beating the market.
Right.
But we know they're not gambling. They're not using feelings or emotions to pick businesses, which tells us they're starting with some sort of math. The question is, what is that math? And I'm a big math nerd. And I'm like, all right, so let's figure this out. So I read as many books as investing as possible, and I went down the YouTube rabbit hole, and I found a guy by the name of Phil Town. Have you ever heard of Phil Town?
I haven't. No.
Okay. He's based out of Georgia. He's an ex-hedge fund guy, but started getting into the financial education space, but wrote a few good books. One of them is called Rule 1. The other one is called Payback Time. He's got a third book called Invested. He wrote with his daughter, Danielle. I did not read that. I'm sure it's great. But his first two books, Rule 1 and Payback Time, provided some of the calculus that I was looking for. I'm like, okay, so finally somebody's showing a little look behind the curtain here.
Yeah.
And I put that into Excel, but my background to this point has been highly focused on, yes, tech, but in the manufacturing world. So I was working at GE at the time, and GE is big on process engineering. And with process engineering, if people don't know, when you have, let's say, 100 data points and you have to report to a client or even an executive, you cannot show those 100 points because they're too confusing. What you need to do is you got to roll them up to something that's really easy to understand, ideally binary, like a yes or no, or traffic light. That way you can get decisions done much faster, hence the phrase process engineering. We're moving through processes faster. You have to make decisions faster. So I was like, is anybody out there using a traffic light rating system in the stock market world? And surprisingly, very few are. Like I can't be the only person complaining about this. And that was kind of one of the aha moments of, all right, so I'm going to layer on a rating system over these mathematical algorithms, again, provided by Phil Town and inspired by Warren Buffett and Charlie Munger. So in Tykr, I created an Excel sheet. This was around 2015 or 16. And I set it up so stocks are either on sale, watch, or overpriced. That's green, gray, or red, making it super easy to make a decision. And to be transparent, Tykr's calculations even today are open source, so people can see the math behind the platform. That's one thing that separates us from a lot of people. But we use like revenue growth rates quarter over 16 quarters.
Yeah.
Same thing with net income, EPS. I won't give you all the details here, but we look at free cash and debts and liability. There's quite a few. There's a lot of data points and it's a lot of math, but when you really dig into it, it's actually pretty simple math, but it's putting a lot of rigor. This is another process engineering thing, is you can't just look at, like, let's say P to E ratio and market cap and make a decision. And that is unfortunately something I see a mistake made with a lot of investors out there. But anyway, back to this Excel sheet. I use that the next 4 or 5 years with my own money, like testing this thing, iterating, small iterations. But long story short, over the course of 4 or 5 years, made returns between 15 and 50% per year. Still in that range today. Even our own customers are closer. Get this, 13,000 customers now. Average returns are closer to about 16, 17% per year over the last 5 years. We're showing the analytics. So it's like, all right, most of these people are doing pretty well. But I figure I saw that, okay, so I've got something here. It's much different than anything else on the market. 2019 is about the time I kind of realized this, but just to confirm this has product market fit, I want to send this Excel sheet to a few people, other retail investors, and get their feedback. And everybody's like, you have to totally turn this into a software. Like, can you do this immediately?
Yeah.
But it took a year to build the first version. Fast forward to today, 5 years, and it's been a grind. I mean, it's been a lot of hard work building this thing and building a customer base. But yeah, we've got now over 13,000 customers in over 50 countries.
Wow. Yeah, that's neat. I mean, and really, for most people that are looking into stocks and companies, I mean, there's it's a difficult, I mean, there's just so much out there and so many things. If you can use these various benchmarks to help make a more educated decision, then you'll be, a lot better off. But it's a lot of research. And if you've got a tool like it sounds like that Tykr is, it allows you to be able to do it very quickly and make, good buying decisions.
Exactly. And my thing is, and this is where a lot of customers gravitate towards as well, which is the returns are they're nice, but that's not the thing. The thing is that most people gravitate towards it really boils down to one word, which is confidence. The confidence to invest on your own. That is literally the rest my head on the pillow moment and have the best night of sleep of my life. Like when customers get a hold of Tykr and they're like, hey, I could totally do this. That's the peace of mind they're looking for. So we have really learned to lean into that, is how do we layer on more confidence in the tool? Again, returns are great and Tykr does perform very well, but at the end of the day, I learned it's like, that's not what people want most. It's confidence. Yeah. So that's our focus. We give people confidence.
That's great. So tell me a little bit about, is this an application that you can have on your phone? Is this something that you have on your desktop? What format, I guess, is available?
Yeah, it's a web app and mobile app, iOS and Android. We went live with the web app first, and then I think it was like 2.5, 3 later, we finally launched the mobile apps at the same time. But yeah, I mean, as you can imagine, a lot of people are playing around with stocks on their broker, on their phone. It's like, we got to get Tykr on the phone as well. So
for sure, yeah, that's where I mainly buy mine. And are you able to buy through Tykr, or is it it's a tool that you use to kind of say, hey, I'm going to buy some stocks today, and let me jump on Tykr, let me do the research as to which ones, and then go on to my normal brokerage account and
Good question. So we don't want to replace brokers. If you may know this, and some of your customers or your audience may know this as well, but creating a broker is actually a very hard business model because you have to go through so much compliance per country that you go live in, because you're managing people's money. Once you touch people's money, you're under the microscope of the SEC. So we fall into what's called the publisher exclusion category, which is the same as some of our competitors like Seeking Alpha, Motley Fool. Okay. They're both fine platforms, but we're considered a much easier to use version. But yeah, you could put us in the category of analytics and education. But we partner, our growth strategy, one of our big growth strategies is partnering with brokers, because there's a few, and I won't talk your ear off here, but there's 2 main things brokers care about most, which are transactions and account sizes. And we are showing our customers typically make 30% more transactions per month, which is a gold mine to brokers, because that's where they generate the most revenue. And then the average account size, get this, at most brokers is around $5,000. Tykr's audience, it quickly goes from 5,000 to 180,000 because more people are adding more capital to their broker. And that's another thing that brokers want really bad, bigger account sizes.
Yeah. Makes total sense. And then what about, so let me just ask a couple questions on it.
Sure.
And I'd love to hear, I know you started to, maybe we could start with that. What are some of the big things that you're looking for? There'll be some stock. I'll give you an example. I sent, and I don't remember offhand what company it was, but I sent a stock out. Anytime I pick one, and believe me, it's like throwing a dart at the dartboard,
sure,
or just at a wall. With me, I would love to say that I've got some insight, but I'm just, I'm averaging okay, but it's not, there's not a lot of science behind it. So definitely, Don't use mine to build your portfolio. But anyway, I had one, and my dad was like, hey, they haven't had revenues. He's like looking, and he's like, hey, it may be doing well for you, but they haven't reported revenues since X. How do you account for something like that? You've got sometimes new businesses. I mean, Uber would be one, where revenues was just not, they were losing money, quarter after quarter after quarter for the longest time. Is there something available that can still account for that? I don't know if it's customer growth. I don't know if it's, there's something that, hey, look, this is one that's going to eventually blow up, or is this like, hey, that's probably not one that fits in our categories.
Sure.
We're more focused on the bread and the butter. Maybe can you speak to that?
Yeah. So I use Tykr now exclusively instead of worrying about what's on social media, or if there's, guys on Wall Street that are talking about stocks, and it's a lot of noise. And that's part of the reason I created the tool, is I needed to cut through the clutter. But yeah, like we're looking at the fundamentals. Like there's no technical analysis, so we don't worry about charts. We have charts in Tykr. In fact, the charts we use are trading views. It's been a great library. A few of our trading customers really like that. But we look at the fundamentals. And in your case, like your dad was saying, it's not a business that generates revenue. In most cases, a business like that, they're going to end up as overpriced, like red, or maybe that gray, which is watch. But very rare, they're going to hit that green. So it's like in seconds, you can look up any stock and be like, okay, so I'm not going to touch this one with a 10-foot pole. Their financials are terrible. So
Right.
Yeah.
No, that's helpful. And then what about, so oftentimes then you may look at it and, each Tykr is kind of a snapshot in time, right? It's with the health of the company at that particular moment. Things change. Is there a way to still keep your portfolio on Tykr as well, to kind of monitor and say, well, hey, wait a minute, should I still keep this one? Is this still one that I should? Yeah, go ahead.
Yeah, good question. So Tykr is now, this is the big project in 2025, is we are now connected to, from a technical standpoint, about 25 brokers like Robinhood, E-Trade, Schwab, Fidelity. What that means is your portfolio is automatically synced. So we have a portfolio tracker. I'll give you some of the features here. This will give people a visual. So yeah, portfolio trackers, so you can see the rating of your portfolio, because we average your ratings and give you that summary, whether it's on sale, watch, overpriced, and give you the breakdown. There's also scoring. We've got a watch list feature where they're literally watching stocks for you. For example, if you add stocks to your watch list that are also in your portfolio and any ratings change, you automatically get notified. So an example would be, let's say you've got an on sale stock, you get an earnings report, and that stock flips to overpriced. It goes from green to red. Well, that's probably a good opportunity to sell it. And I've done that a lot. That's kind of like before the rest of the world sells it, you can get out before you lose money. A lot of people love that, right? You can set alerts on anything. We've got, I think, like about 60,000 stocks, 3,000 ETFs. We do have crypto in the tool. However, you can't analyze crypto because crypto coins don't have an income statement, cash flow statement, and balance sheet. But a lot of customers asked, hey, can you add crypto to the tool so we can track all of our assets in one clean location? Because you can set alerts on anything, whether it's like stock change alerts or like an earnings report, or let's say there's news you want on a particular site. You can get like everything you want in one clean location. So that's just a highlight of a few of the features.
Yeah. No, that's really neat. And you guys have grown obviously quite a bit. How are you getting the growth? I mean, how long has the company been in business?
5 years.
5 years. So, I mean, incredible growth to get over 30,000, subscribers.
13. Yeah.
Oh, 13. Yeah. Sorry.
Yeah. I wish it was 30.
Yeah.
We'll get there.
Yeah. After this episode airs, you may just be there.
You'll send us to the next stratosphere here. No,
Right.
To answer your question there on growth, My experience working for a lot of larger companies, and I won't go into too much detail here. Like, for example, I did a lot of work with Kohler and GE, and especially with Kohler, is selling product through channel partners. That's where you really scale. Like when you're building a software business, a lot of small business owners will think, oh, I'm just going to run ads. That can be a money losing game. And where big businesses grow the quickest are actually through channel partners. You align with one strategic partner. Like for example, at Kohler, I remember doing a project selling product through Costco. And in one day we did like 8 figures. Like in one day, not a month, week, or year. It's like you move money much faster through channel partners. So
for sure.
So that's our fastest growth strategy, is aligning with other fintech platforms, YouTube influencers, bloggers. The big play though, and this has taken 5 years to get here, is to show the data to create leverage to work with brokers. Because again, they're looking for increase in transactions and account sizes. Well, now we're showing the proof. So our goal is, I won't go into too much detail here, but our goal is 1 million subscribers over the next 5 years. When we get there, Tykr's valuation will be over $1 billion. Well, how do we get to 1 million? The answer is it's channel partners. And where are the most people in this space? Well, they happen to be hanging out at brokers. So we got to focus on the broker problems. So those are a few ways we grow. We do SEO as a percentage. We got a YouTube channel with like, I think about 6,000 subscribers now, which great. But it's like, there's omni-channel I'm big on, is like, you want multiple ways people are finding you and signing up for the tool. So.
For sure. Yeah. Wealthflow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. No, very neat. And so maybe from a customer experience standpoint, what are some of the things, some of the feedback that you're getting from customers, that maybe was expected, but, maybe some stuff also that wasn't expected that you're hearing?
Yeah, good question there. So when I was building the first version in Excel, I thought everything was focused on returns, like that. That's what and that was not the thing. So when I started getting feedback from customers and testimonials, the common word, this circles back to what I said earlier, which is confidence. This gives me the confidence to do this my own, because we really lean into Trustpilot, because that's been a great marketing tool, is to redisplay those testimonials back to prospects that are looking at us and be like, hey, this is what this person said. But it's a lot of like, I'm a complete beginner. I didn't know what I was doing, or I was guessing in the market. And now I have the confidence to do this on my own. Or I was picking stocks and didn't know what to do if they go up or down. Like now I have the confidence to make decisions. And it was that on repeat. So that was the aha moment. Like, oh, people aren't necessarily looking for returns. They're looking for confidence. So we just double down on that. Yeah.
Yeah, that makes sense. And it's kind of I wouldn't have expected necessarily that, but it totally makes sense. And it would give you that. How about, and this is really helping with buy, I guess sell, or just don't buy. But if you have it marked on as part of your portfolio and you have, kind of the alerts set up where you'll know whether to sell it or not. Is there any other anything beyond that from a strategy standpoint, or anything that talks about kind of how to set up your trade, or is it mainly just buy or sell?
It's pretty much buy or sell, and this is value investing focus. So we are long term. There are people that they're trained in this mindset where as soon as they buy a stock, their very next question is, all right, when do I sell it? And
Right,
unfortunately, right, that's not where you make money. It's buying and buying more, especially when the stocks go down. So I'll give you a few strategies here. The one is, of course, buying stocks every month is critical. We've got case study after case study. I'll keep this short, but there's a case study we share by a guy by the name of Ronald Reed. You can look him up on CNBC, but this guy was a janitor that built a portfolio of $8 million. Question is, how does somebody who's making close to minimum wage build a multi-million-dollar portfolio? Well, the answer is you need a portfolio of about 10 to 15 stocks. And Warren Buffett, how he made his first million was about 10 businesses. There's a formula there. You have too many stocks, you're over diversified, you're not going to accelerate your wealth. So we really focus on about 10 to 15 stocks. We also teach our customers you want to try to invest 15 to 30% of your monthly income. If you can't get that high, don't worry, start small, but at least put something in. If it's $20, $50, $100, whatever. It's training the discipline of being in the market every single month. But the big one is, and I give all the credit to Phil Town on this one, which is called stockpiling. That's when the market pulls back. And there's nothing wrong with your on-sale businesses. You want to deploy as much capital into those on-sale businesses because what typically happens is the next earnings report comes out. And if that EPS is increasing and they beat their earnings estimate, that stock usually, not always, but in many cases, it skyrockets. And that's where you make some seriously massive returns. Stockpiling is key. And we actually have alerts on that. Like when your stocks go down, this may be, it doesn't tell you to buy because we don't actually tell. We can't do that. We can't say, hey, you need to buy or sell, but lets you know you get a stockpiling opportunity. You might want to take a look at this. So.
Yeah. Okay. No, that's cool. So it does have that feature then to be able to tell when it's going down like that. Because there's certain ones that when they do it just makes sense. It's a buying opportunity for sure, and a lot of times they're always going to. If you look at the history, they're coming back up. It's just bad day. So.
All right. I mean, I'm going to leave more time for your questions here, but to double down on this, when we had, I call them Tariff War 1 and Tariff War 2. One was, it was March, what was that? No. It was September of 2017 through March of 18 when Trump started talking about the tariffs. Well, tech stocks started nosediving and I didn't have any issues. Like my stocks, I'm like, there's nothing wrong with these businesses, but using Phil Town's teaching and using Tykr, I'm like, all right, these are on sale stocks. I'm going to double down. And remember that year in 18, my returns were over 80%. I don't get 80% every year, but I'm like, hey, this is a gift. I'm going to take it. But same thing, COVID in 20, same situation. It was between February of 2020 through about March, April when the market started taking off again. It was just a few months, but the market went down like 30%. Individual stocks went down like 50, 60, 70%. I'm like, I'm stockpiling. There's nothing wrong with these companies I'm invested in. They're maintaining on sale status. Sure enough, market started to turn around and these took off. My returns have not been as high, but that year I made 120. I'm not going to get 120 every year, right?
Yeah.
Like I wish I could do 120% every year. That's not going to happen. But you need one of these market events that there's, again, nothing wrong with the businesses. It's just the market pulling everything down. That's a gift. I've got a financial advisor. We've got a lot of advisors that use Tykr, but this one was like, Sean, it's like Christmas morning. You've got gifts waiting for you. Like you want to deploy that capital. Because it's not going to happen very often. I'm like, you're 100% right.
Is there anything from the calculations that you have within the program that measures the trading volume? No. I see that a lot, and I can see how sometimes, obviously, especially with a lot of this stuff being automated and AI, and sure. I mean, sometimes the trading volume could probably just pull you down or get you to do something that you don't necessarily want to do if all the other fundamentals seem to be right. But just curious.
Yeah, we don't even worry about it. That's going to create noise. That's going to cause you to make like unwise decisions. And I'll piggyback on that comment is there are things you can do with technical analysis, and I was looking into this is in I think 2017 or 18, playing around with like the MACD and the stochastics and other things. In fact, Phil Town was teaching some of this stuff, and I found myself in a situation where I was selling out of really strong businesses. It was and that's the moment I decided I will not touch TA. And I will not introduce that to our customers, because by keeping it pretty boring, like straight up value investing and the whole concept of buying and buying more, you actually do get much better results, because TA or like volume, volatility, it's misleading indicators that are going to cause you to make the wrong decisions. Like, for example, I remember, get this, selling out of Facebook when it was Facebook, now being Meta, but
Right.
I missed out on huge returns getting back into it. I'm like, this was so stupid. Like, I'm not touching TA. So,
Yeah,
yeah.
that makes sense. What are some of the other ones that are part of the tool that you do feel like, right? That one's obviously one you've excluded purposely, and I think it's probably the right move. And then what about some others that you feel like do seem to be something that really need to be paid attention to?
Yeah. So, to get into the lines we look at, and then I'll talk about two features that add layers of confidence to that. There are 8 lines on the financial statements we pay attention to. So 3 lines on the income statement. We look at revenue, net income, and EPS. We want to see those moving or increasing every quarter over the last 16 quarters. We want plenty of rigor. And what we're doing is we're not looking at the actual numbers per se. It's the percentage growth rate from quarter to quarter to quarter. When you start adding points to each of those, that's when we got a consistent company here that's increasing revenue and increasing profits, so on and so forth. On the cash flow statement, we look at one line, that would be free cash flow. And then on the balance sheet, we look at 4 lines: assets, debts, liabilities, and equity. We want to see assets and equity increasing and liabilities and debts decreasing. When those numbers, again, 8 lines, are moving in the right direction quarter over quarter, you get a much higher score. So again, a ton of rigor there. What we do on top of that then is we have a tool called the 4M Confidence Booster. Phil Town really coined the phrase 4Ms, and we've got a patent pending on this. But the first M is the math part. That's that summary, that score, the margin of safety we all roll up. Then the next M, that second M, is the meaning. That's the business model. How many revenue streams does the business have? How scalable are the revenue streams? You can't quantify that. So we're using AI. I'll talk about this in a second, but we're using AI on that. We use OpenAI Enterprise. And then the third M is the moat. That's how the business compares to other businesses in the same sector and industry. And then the last M is the management. That's the track record of the CEO. What have they done in the past? What are the big wins? Well, of course, the first M is quantitative, but those next 3, that meaning moat and management, those are qualitative. You can't really, quantify those in any way. So we use AI, and we get a scoring system where the 4M Confidence Booster, it literally is taking hours, if not days, of research and reducing it down to seconds. In fact, we show the average scores. You don't even have to go through it. It's like a 1 to 2 minute interactive experience you can do with every stock, the 4M tool. And now you can log in, but you're looking for a score to add on top of that traffic light. You're looking at a score of 80 or higher. So that's another layer. And this is one thing we learned about the psychology of the retail investor, and S&P Global kind of backed this up. They can really confirm this, is people typically create layers of confidence before making a buy or sell decision. So a good example is they may look at Tykr, they may look at their favorite celebrity, investing guru, and then maybe one other thing, and then make a decision. Or they'll look at, let's say, Motley Fool, Seeking Alpha, and then they'll go to Tykr, and if all 3 align, okay, then they make a decision. This is very common where people take 2 or 3 things and layer it, but what we're doing is creating layers within the tool. So the 4M is the second layer. The third layer is a feature we call the 7, which really rolls up 7 key metrics you really want to look at. I'll give you those right now. So you've got that summary. You've got the score, you got the margin of safety, and then the 4 answers, 4 right in a row. We want those all green. And then we look at the 5-year returns. We know that past performance does not guarantee future results, but we want to see stocks that are over 80% over 5 years because they're consistently beating the market. So that's another point. Then we want to see the EPS increasing 3 quarters in a row. If you can do that, that's another point. And then the last one is the earnings report. Did it beat its earnings report 3 quarters in a row? Getting a 7, get this, we've got 60,000 stocks, and I'm going to have you take a guess here. 60,000 stocks, getting a score of 7 out of 7. How many stocks do you think have a score of 7 out of 7 right now? Just take a guess out of 60,000.
Let's say maybe 20,000 out of the 60,000.
Well, you could have stopped with 20 because that's where it ends. 20.
Oh, really? Okay.
20
So it
stocks.
breaks through the noise for sure.
Holy, yeah, smokes, it does. Yeah. And I was kind of impressed with that. Like when we started putting that together and saw it come to life, like, cause we're pulling all this data every day. But when we saw, I was like, are we going to get like 500 here or what? And then I saw 20. I'm like, whoa, that is really hard to achieve. Now getting, I think it's 6 out of 7 is closer to, I think 1,000, maybe even less. And then 5 out of 7 might be 2,000 or something. So it really does cut through a lot of noise, like you said. And in the 7 here, if you play with the tool, it says explicitly that we're looking for stocks that have a 5 out of 7. That should give you really, really high confidence. And again, that's very hard to achieve.
Okay. Oh, that's great. And on those, just out of curiosity, on the 7 that have scored, 7 out of 7, the 20 caught stocks, do you have any data on the? I mean, I know you've got data on it, but offhand, do you know if you were to rely on the app for that and say, hey, look, I'm going to just buy these and focus on these, what kind of performance would you be?
Yeah, I'm going here. I'll give you a second, or just give me a second here. Okay, so yeah, we've got, whoa, look at this. I just did a filter. It's not 20 stocks today, it's 40. Ooh.
Oh, wow. Okay. Yeah.
But here's some of the 5-year returns of these stocks. So we know 80% is the benchmark S&P. So we've got Fix is over 5 years at 1,800%. There's one FFH is 400%. Fortinet is 150%. I hold Fortinet. NVIDIA, get this, NVIDIA's on the list. It's a 7 out of 7. That's 1,200%.
Wow.
Sterling is 1,400%. We got Powell, POWL is 1,200%. So you can see here, like, here's one. Vertiv is popular. That's 800%. Okay. So you can see, like, it's not in every case, but there's a lot here that are just,
yeah.
You get a 7 out of 7, you're blowing the market away by a lot of shots.
Oh, that's great. That's great. Very cool. No, that seems like it's quite a bit. Now, is from a intuitive standpoint, I mean, are you able to look at this and say, you mentioned the guideline kind of that's within the application that says, hey, look, if it's 5 out of 7, you're probably in good shape there. For each of those sections, it kind of helps you to qualify it if you're kind of an amateur like myself.
It does. Like, one thing that a lot of people appreciate, we've taken a lot of inspiration from Duolingo. They've done such a good job with education. Have you ever used Duolingo for like learning a language?
No.
Okay. Probably a lot of your listeners have, or at least some of them, but I was trying to freshen up my Spanish, but you can go from like 0 to 60 and learn stuff really fast. Well, the key is micro learning. It's an actual thing. So we have these little how it works boxes kind of peppered around the tool. So if there's something you're not really sure, there's a button there, bam, little pop-up, shows you exactly how this works, what you're looking for. Gamification is built into place. So it makes it super easy. And then at the same time, we've got learning modules in the mobile app, kind of inspired by Duolingo. And then there's emails that go out every day. So it's giving you the education and guidance. And get this, the statistics here, our customers the average returns in Tykr, I think today are around 16, 17% per year over the last 5 years versus the S&P, which is closer to 12, which is still, that's pretty good for the S&P. But get this, 80% of our customers, when they sign up, they either get to mention if they're beginner, intermediate, or advanced, and 80% or close to are beginner. And the rest are more experienced investors. A very small percentage. I think it's like 10% or something, but shows you a lot of people are very new, but doing very well.
Yeah, for sure. Okay. Well, you've sold me on it. I'm going to have to check it out after our recording here today.
Sure.
I need all the help I can get. So that's good. And so how about, so you've told us kind of the goal, right? You're looking to do 1 million subscribers, and on track to do that. Obviously, it'll be that exponential growth as you work with more and more of these folks, and as you get more and more data for the different brokerage houses. What in addition to that, is there anything else that you see in the future that you guys are working on, or you think here's something we probably need to incorporate, or tell me, I guess, a little bit about the vision and what you see kind of over the next 3 to 5 years.
I just released a video with kind of a highlight of the roadmap for the year. I'm not going to hit on every feature here because we got a lot of fun ones, but we're working on right now what we're calling an AI investing helper. You can interact with it to learn how it's going to be kind of incorporated with Tykr's data, but you can use it to learn how to invest. You can use it to build portfolios. You can use it to analyze a current portfolio. So that's going to be a big win. We're also adding real-time pricing or 15-minute delay. It'll be US and EU stocks is the goal. A lot of other markets don't really have that, so it's all end-of-day data. Here are 2 other features that are going to be huge. One is a community feature where you can follow your friends. You can see their portfolios. We're not going to show the total dollar amounts of portfolios because we want to keep everybody on an even playing field, but you'll see the returns, you'll see weighted allocations, you'll see what stocks they hold, but that way it keeps some anonymity to people's portfolios. When you follow somebody, like for example, if I were following you and you make a trade, I will get notified. Like they're like, can you add that like yesterday? And then one other feature we're going to work on is a point system. And this is key. Pay attention to the last detail of the point system. So you can earn points by making smart investment decisions. For example, that stockpiling strategy. If you have a really good stock, it goes down and you're fearless, not fearful, but you're fearless and buy some, you're going to earn a bunch of points. There's other ways you'll earn points too. But then I started sharing this idea with brokers and I'm like, can our customers accumulate points and trade those in for free stock? And a few brokers, not all brokers, but a few were like, oh, 100%, like we want that. So what it's doing is creating a forcing function where people can, just by using the tool, they can earn money to go buy stocks. And that's going to be
cool.
Huge.
Yeah. No, that's cool. That's and just kind of gamifying the fact that you're actually being brave and having that confidence to go ahead and buy when it is going down and it's a buying opportunity. That's awesome. Very cool.
Yeah.
Well, Sean, how can people find out more about Tykr and any other resources that you want to be able to point people to? Like I say, you have caught my attention. I've used quite a few different things throughout my life to help build wealth, and I've always a weak point's always been stocks, individual stocks. Outside of like 401k, and even then it was limited because it was through an employer, and it's always good to have an avenue to be more confident and be able to buy and feel good about the decisions.
Yeah, so keep it simple here. Anybody can go check out Tykr, Tykr.com. And we do have a 14-day free trial. And I'll just be transparent with the pricing for people in case they're curious. We are $15 a month. If you're in the US, it's $15 a month or $99 a year, which is pretty much in line with our competitors. It's pretty low barrier to entry. any other resources on top of that, Phil Town, his books, Rule 1 and Payback Time, that's kind of the inspiration for Tykr. So if you want to learn more about him and his books, go check him out.
Fantastic. All right. And then I've got just 2 questions, Sean, that I ask every guest. One would be any advice you would give somebody who's maybe just starting out in their investment journey?
Yeah, the first thing is education, and don't worry about anything else at that point. You just want to get educated, and that's where we come in. And we actually teach people once you get educated, which we tell people can usually take 14 days or less. Some people it's 1 day, but it's kind of the expectation. From there, we teach people how to invest your first $1,000, because at that point, the objective, it's not building wealth, it's increasing confidence. Once you increase your confidence, then you can accelerate your wealth. So we kind of break things down into nice, easy, bite-sized pieces for people to get started.
That's fantastic. And you've given a couple book recommendations. Again, that was Phil Town, Rule 1, and then Payback.
Payback Time. Yeah, both are great.
Okay,
Yeah.
perfect. Any other book recommendations?
My wife got me into this app called Libby. It's associated with the library system.
Mm-hmm.
And you can rent books, or not rent, you can literally check out books for free. And she consumed like 85 books or something in 2025. And I'm like, because I'm a reader, I love reading paper. She's like, no, you gotta dial up the speeds, because I've got them on 1.25. She's like 2.0 on the speed, but I'm listening to, as we speak, Smarter, Faster, Better by Charles Duhigg. I'm big into human psychology. I love anything around human psychology and business books too. But if you get better at psychology, you get better at sales, is really what I found. So.
Perfect. No, I love it. All right. Well, Sean, this has been fantastic. I appreciate you being a guest on the Wealth Flow, and I think we'll call it a show. Thank you so much.
Thanks, Keith. We'll see you.
All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love, more than anything else, to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.